what better way to start by having the most popular exchange in the world at the moment, which is Binance. Now we have the head of Binance Singapore, David. David, thank you so much for coming. And it will be nice to have a great insight on what's happening with the market and how has Singapore been developing at the moment.
Sure. So I just recently joined Binance a couple of weeks ago. As part of my responsibilities for Binance Singapore, I'm looking at MAS regulations in the region. We are planning to launch a fiat to crypto exchange that CZ's already announced, currently in beta testing, and hopefully we get that launched later this year. On top of that, we're also layering over-the-counter trading, so for big block sizes to get fiat to crypto back. So my background is particularly suitable for this space because I spent over 10 years in the regulated space in terms of investment banking, mergers and acquisitions, and private equity. So I've been licensed in the US with FINRA as well as Hong Kong with SFC. So I've been looking through some of the regulations that MAS has been developing. I think they're coming out with a couple bills later this year or maybe next year. They're revising the payment services bill that will allow the licensing of virtual currency exchanges. And they're also revamping the RMO regime, which is basically your recognized market operator regime, which SGX obviously holds a license to basically make it more flexible for smaller exchanges, crypto or maybe non-crypto, to operate within Singapore.
When you say that the OTC market is going to be established within Binance, right? Is this going to be an international platform, of course, to start? But are there any particular regions that you're going to be focusing on, countries that you feel that are easier to get this going?
Yeah, I think so. For us, we have a number of OTC desks around the world. But within Singapore, because we want to abide by local MAS regulations, the OTC desk here will probably only service Singaporean high net worth individuals and then Singaporean institutions. As part of the regulatory regime in Singapore, MAS is very concerned about AML, CFT, right?
Yes.
So this is something that we have to track very carefully to make sure that the funds that are coming in are clean and then the funds that are going out are clean.
Will there be any restrictions to the countries that you're going to allow on the OTC desk at the moment? As in, usually there's a few countries that
Of course, obviously you're politically sensitive and your countries are on the sanctions list. Of course. We definitely will not allow these.
Where do you see the bulk of the money flow coming in from?
So in the few weeks I've been at Binance, we've gotten very large orders of Bitcoin from various family offices, various hedge funds, institutions, and these are large, multi-10 million, $100 million size type orders. So there's definitely a lot of demand out there, and then these people are trying to figure out what is the right platform to acquire this Bitcoin through, and then what platforms can they safely store their assets, right? Because if you're a regulated financial institution in most parts of the world, it's your responsibility to keep your assets safe, right? So a lot of people, for instance, like in the US, you use custodian services like State Street, right? So obviously everyone knows custodian services is still very immature in the crypto space, but there are obviously a lot of people that are starting to work on it. Even in Singapore, I've talked to a couple players that are working on getting a regulated securities custodian license. So then they can store securities as a custodian, but then on top of that, if MAS regulation shifts where they classify, let's say, certain altcoins as securities, then you could also store those altcoins within that regulated custodian service.
So is Binance going to consider becoming a custodian, or they're going to be, for now, using a third party?
No, I think it's best to use a third party.
Okay.
Because I think to build out a custodian service requires a lot of capital, right? Requires a lot of expertise from the financial space, requires a lot of regulation. Right? Especially, you might have to get regulated as a bank in certain regions, right? Because you're holding customer assets. So these are areas that we consider to be more capex intensive that we would like to outsource to third parties.
So as an exchange at the moment, I think there are many cryptocurrency exchanges that are popping up all over the place.
Yes.
Now, do you find that that is a good thing for the space, or it's actually not as helpful if they're not as compliant or very poor infrastructure? What is your take?
I think it's a little bit of good and bad. I think if there are reputable exchanges that have better technology and offer quality token projects, that's good for the space. But I think recently there's been thousands of exchanges that pop up, right? They just white label a piece of software, they list a bunch of collectible tokens. Their user numbers may not be real. Their trading volume may not be real. And I think it's a little bit harmful for the industry because it really fragments the industry. Because if you think about like how does the U.S. trade? Everyone trades through Nasdaq or NYSE. Why does that work? Because you have massive liquidity, right? You have hundreds of institutional market makers, right? You have half of the U.S. population owns securities. That's over 150 million people that own stocks, right? So you have tons of liquidity driving through those central exchanges, right? But then of course there's a risk because all your assets are concentrated within this exchange platform, right? Think about when there's a flash crash, right? Nasdaq drops 800 points or something. It's crazy. There's this flash crash, but that's something that we're working on. Binance is working on a decentralized exchange to provide more stability and security. But until then, I think you have to sort of drive volume through a few of the top centralized exchanges.
And when you mention liquidity, right, how is the market or exchanges going to kind of share that their liquidity is real and legit? Because a lot of exchanges are already faking the volumes, or they try to at least have that kind of appeal. How is Binance going to be able to just push above the rest? Just to show that, hey, our volume is real, our liquidity is real. How do we show that?
I mean, look, it's a very good question. I'm not sure how to answer it, but I think CZ's view is that we operate as the most ethical exchange, right? So we try to prevent all the types of issues that happen in securities exchanges that are basically illegal, right? Front running, insider trading, wash trading, these types of things are basically security sins in heavily regulated areas like the US. So we try to do as much as possible to prevent those types of activities. We have analytics software that tracks that kind of thing. We try to do KYT, we try to do KYC and so we try to put controls in place that can control activity.
I think everything starts from self-regulation. Okay, so with regards to the current market sentiment, I think that's not going to stop Binance from growing and developing and continuing to hire great staff and professionals. I think for the fact that you used to be in the equity markets, what is the one thing that you can share with the audience that's going to really bring the next bull run? Or at least what is holding the old money back?
I think security of assets. Right? The old money. In the US, for instance, you see all these news about these billion-dollar crypto funds. But in essence, those crypto funds cannot be $1 billion because in the US, if you're regulated, if you have managed AUM over $150 million, you are required by law to put your assets at a third-party regulated custodian, right? But those don't exist right now, right? Those don't exist in the traditional world. They don't exist in the US. They don't exist in Singapore. They don't exist in anywhere. So I think the institutions are looking at it. They want to find places where they can safely store their assets. And then on top of that, you have uncertainty of regulation around, so like for instance, Bitcoin. Bitcoin has been classified as a commodity by the CFTC, so basically CFTC is regulating it. I think Ethereum is also a commodity, right, from what I've seen. But a lot of altcoins may or may not be a security. So there hasn't been that determination. I mean, of course, there's a Howey test, but then everyone can interpret those Howey tests a little bit differently. So I think for institutions, it's a massive risk for them to go in and buy, let's say, $100 million of some altcoin, right? And then suddenly it's a security, right? And they haven't been properly storing in a custodian, they don't have proper controls in place, and then they're a violation with some securities law, right? That's a terrible thing to happen for regulated financial institutions, right? So there's a lot of issues and clarity around regulation that need to be developed and cemented, and there's a lot of issues around the security of your assets that need to be cemented.
All right. Thank you so much, David, for coming by.
Thank you.
Thank you.